Okay, guys, good evening. It is 8 o'clock p.m. New York time on Monday, November 13th, 2017. And just making a quick video regarding some really interesting news tomorrow during the early London session, and that being the Bank of England, actually not the bank, but the England will have its CPI reading coming out. This is a major piece of news that's more than likely going to have significant volatility associated with it. Now, a little bit of background here. Now, last time it came in at 3.0%, which is well above their target of 2.0. So the bank did raise rates last month, although the market sold off instead of rallying, which is counterintuitive. But we'll talk about that in 1 second here. As I was saying, guys, so last time it came in at 3, they're expecting 3.1. Now, they did raise rates last month because the inflation is well above their target of 2.0%. And so you would have expected that the pound would have rallied, but instead, this is it back here. It actually went down in quite a bit, and now we've been kind of moving choppy up since then. And so I think part of the reason why this went down is, well, to me, from an Elliott wave standpoint, this was a perfect wave 3, 4, 5 pattern that caused that decline. 1, 2, 3, 4, 5, something like that. So from an Elliott wave standpoint, it was really easy to see. From a fundamental standpoint, I think that the market really was expecting that interest rate hike because inflation had been running so high. So it was kind of a buy the rumor, sell the fact. The market pretty much had priced it in. So there was no real big surprise there. So people took it as an opportunity to take profits and saying, hey, that there was no news here. So it wasn't a bigger hike than was expected. It was exactly what they expected. The bank has also come out since then saying that they expect rates to peak around 3.2% and then begin to drop. So that's kind of the high end of what they're expecting tomorrow, with a low of 3. So that's kind of the range. So my guess is that if we get a reading that comes in at 3.1 or even 3.2, again, I don't think the market's going to get really excited about that. We may see an initial push up, but I still think that would cause the market to drop because, again, that's pretty much what the bank has said. It would go in line with what they said, that, hey, we're expecting 3.2, and then we're going to start to fade back towards target. So the market may say, hey, the bank's right. It's coming in about where they expected, and so the bank has also said that because of that, they're not in any big hurry to continue to raise rates again. So the market might, until, I think they said next summer, if that it turns out to be the case, it wouldn't be until next summer before they would look at possibly raising rates. So if it comes in 3.1, which is what is expected, or maybe even to 3.2, I wouldn't expect it to do much because we're probably going to see, the market say, okay, well, the bank was right, and we're not going to see any more rate hikes for a while because we expected the inflation to continue to drop back towards normal, what they would consider ideal levels. Now, so I think the trade would be probably one of two things. Ideally, if we come in at 3.1 or lower, if we come in anything in the 2s, forget it. There'll be a major sell-off. But I think even if we come in at 3, which is only 0.1 below the expectation, that will again signal to the market that, hey, the bank was right. So anything really, with the same result, 3 to 3.2 or anything lower than that, and certainly if it comes in lower than that, there'll be, a really quick sell-off, because then the market can read that as, hey, we're already heading back down towards that 2.0%. And I think only if we come in at, say, like 3.5, 3.4, 3.5 or higher, that the market's going to be like, whoa, the bank was completely wrong and things are really heating up and they're probably going to have to raise rates sooner. But I don't think that's going to happen. I think we come in at around 3.2 or lower, And either way, I think that's going to prompt some selling in the pound. The strength of the selling is going to depend, I think, on what the actual number is. If it comes in at 3.2, yeah, there'll probably be a lot of push and pull going on, because some are going to say, well, look, it's, yeah, the bank said that, but who knows? Maybe next month it'll come in even stronger again. And then there's going to be the other side saying, well, the bank said that, and that's about what they were expecting. So I think we need to see, to have a real volatile, strong move, we'd have to see probably 3.0 or below. And so that's kind of the set on that. So just looking at the charts here, again, we've seen the market really just chopping around here. This is the pound dollar, which I think would be a good trade if it is indeed negative, because the dollar's been strengthening, and that would cause a weakening of the pound. If you go all the way out to the weekly chart, this is a very long time frame. I don't really like looking at this other than just for amusement, basically, because the problem is this is such a long time frame. But this looks pretty corrective on the weekly time frame, that we could see this downtrend continue. But I think more about in here. Again, this gets back to that initial sell-off, and then maybe we're in an ABC here, and now we've started a new downtrend. I think you kind of see the same thing on the pound Swiss, pound Canadian, pretty much the same thing. Down, and now we're kind of drifting lower, but could definitely see another move down. Same thing on the pound yen, again out to the weekly chart. To me, this could be like a diagonal here. Something like this, on the pound yen, and we could see, a significant sell-off, which would go back to the beginning of this. And again, this is a weekly chart, so again, I always kind of hesitate looking at those, because ultimately you might be right, but because this is such a long time frame, there's a lot that can happen prior to this. So pound Aussie, kind of the same way. Weekly chart, looks like maybe we're peaking here on a correction. We have this down move on the 6-hour chart. Now we're kind of ABC up, and now we're going to continue to head down. Interesting on the pound Kiwi, we had this move. This was this morning. We had this move up, and then you had this red candle down during the early New York session, and the market just continued to go up. But I still look at this as probably an ABC correction to this down move. I didn't measure this, but I guess it's worth a measure. That's about 90 pips. This is definitely longer than 90 pips here. It's 102 where it is now. 90 takes us back to about here. So let me check that again here. Yeah. So pound dollar we already looked at. So again, guys, it's going to be a really interesting event. And again, I'm going to be looking at what the patterns are showing tomorrow morning, right before this news comes out, and see where we're at. And but my bias is that this will be negative for the pound. Again, I think we come in at 3 to 3.2, somewhere in this range. That's going to be pretty much as expected, and the market may, if it comes in at 3.1, 3.2, we may rally a little bit, but I think the market will take that as eventually that'll be short-lived, as the market's going to say, well, that's kind of what the bank was suggesting, and we're not going to be bothered a long-term rally. If it comes in anything below 3.1, especially below 3, prepare for a significant sell-off. That probably a sustained one too. And only if it comes in at say 3.5 or better would I expect that the pound would shoot up. In that case, all bets are off to the upside, and we could see a continued move to the upside here. So anyways, guys, so that is it. I will maybe make a follow-up video. It wouldn't be until tomorrow evening, unfortunately, because I'll be busy tomorrow, but I wish you good luck, and trade carefully. You know, these can be very volatile events, and if you're caught on the wrong side, it could be significant losses if you don't manage your risk properly. But look at your patterns. Like I said, I'm an Elliott wave trader, but I recognize that the fundamentals are absolutely critical to these moves too, and you can't be successful without kind of having an idea of both. Any good technical system will work fine with these type of things, but you got to know the fundamentals. So anyways, guys, that's it. Like the video, share it, comment, have any questions, let me know, and we'll talk to you later on in the week. Thanks.